So if you saw my Monday YouTube, we talked about a new program that's coming. Well, all of the information has officially been released today. I have one of my lenders here, Joel, and we're going to talk about it for a little bit, chop it up, see what's going on, and if this program can help you.
Yeah, no, all the details were just released a couple hours ago, so really excited to be completely transparent in everything that came out, the ins and the outs, and just share this great program with everybody. So it's good stuff.
Okay, well, first of all, are we getting that full 15,000?
Good question. Yeah, so everybody, well, of course, as long as you qualify, you are getting the full 15,000. So you're not going to get a certain percentage or based on what you qualify for and so forth. There's a full 15,000 you qualify for the program. You do get a 15,000 that goes solely towards out of your down payment. Which of course, you're buying a home for 300,000. You put 3% down. That's only 9,000. So a lot of people are going to be questioning, well, where's the excess funds going to go towards? Any funds that's not used are going to go simply towards the principal reduction to pay down your loan even quicker.
Okay. So from our discussions before we started here, it is only to be used for down payment. So it's true down payment assistance and cannot be used towards anything else. Is that correct?
Correct. Solely for the down payment assistance, solely for the actual loan itself. Okay. Cannot be going towards any prepaids or anything. It has to go just solely towards the down payment.
Okay. Now, like under Hope Brings You Home, there were certain zip codes that were like originally affected. In other words, they would only use it could use it in certain zip codes. Are there any limits to this one?
No, it's statewide. So it's statewide, you can use it pretty much anywhere that you want to buy and you qualify for. It is not limited to certain geographical restrictions, pretty much open to the entire state.
Okay, entire state. Okay, cool. And do they come out with the final credit score? Or is it still going to be 660?
660, that's the credit score. Unless we're buying manufactured homes, then they do have that overlay of 680.
Okay, so it can be used for any type of home, single family, condo, townhome, and manufactured.
And manufactured, correct. Manufactured with the 680, all the other property types, 660.
Okay, and let's stick on manufactured for just 1 second. Now, there is an age limit for manufactured. Is it going to be the same qualifying age limit as it is now, or is it different?
No, same age limit. And I believe it's 1982, I believe, or something. I can get the exact date. But yeah, it's around that part. So no additional overlays as far as the qualifying criteria for the property. Like you said, it's all types of property. Just to keep in mind, we're buying manufactured. It does have to be between that age, and your credit must be above the 680.
Okay, and I'm assuming that would also cover a, what's considered legally a condo, but the high rises on the strip and a couple of the others around town. Does it cover that too?
Yeah, as long as it's an approved condo, you can obtain financing on those. And the good thing about this program is it does not have any additional overlays when it comes to the property itself or qualifying the individual. They leave that up solely as to us as the lender. The only thing that the state does ask for is they do want a full package 5 days before we close, just so they can go ahead and review the packet entirely to make sure that they meet the household income requirement.
Okay. And was the household income requirement the same as we discussed before, or did they change that in the briefing today?
No, the same as we discussed before. So nothing has changed in regards to the income. Is still based off household.
Okay. And at this point, I'm going to put that up so you can see what the limits are. And now you can see the limits. I'm also going to put a PDF or some type of file below so you get to see what the limits are and anything else we've come up with from this little video today. Now, there is one issue, and it affects my favorite type of loan. What's that issue, Joel, with this one?
Oh, for VA loans. So VA is 100% financing.
Right.
A lot of people use these programs to cover the closing costs. With this program, it would just go solely towards the principal reduction. It does not go towards the closing costs.
Okay. So in other words, if you're going to be using the VA loan, this program is not for you, correct?
Correct. There are other programs out there, but yeah.
Okay. Now, under some of the programs in the past, you had to use like their interest rate or anything? Are they just giving this money and the lender decides to go through the lender's bank, or is it going through? We're not going to mention banks here, but like there was a servicer
Correct.
before. Is there a servicer this time, or does it go through?
Correct. No, there's still a servicer this time, and the rate, it is released every single morning.
Okay.
And the rate is not determined by us as the lender. It's mainly determined, of course, by the market, the agency that's doing the program, and by the servicer.
Okay.
And that rate cannot be bought down. So a lot of different programs out there, such as 2-1, 3-2-1 buy downs, and so forth. With this program, the rate is the rate, it's a 30-year fix.
Okay. So if you had a seller who's like, hey, I'll give you closing cost and a buy down because I want to get out before while the getting's good, you can only get the closing cost. You can't do a buy down at the same time and get free money and closing costs and everything else. So you can't have your cake and eat it too. So okay, cool. Anything else that you garnered from the briefing today?
No, so it's still a first come, first served basis. They're anticipating to help about 500 families. As far as this program, we're really close to the Hope Brings You Home that was released a couple years ago. It is quite different, especially when it comes to only being able to use the funds for the down payment. So I'm really interested to see how many individuals are going to take advantage of it, because in this market, we're getting seller contributions to pay the closing costs. Hey, this program will pay the down payment. So what's your real excuse now for not buying? You got a program that covers your down payment. Right. The seller will pay your closing costs. You pretty much get in with little to no money out of pocket.
Okay. Now, even though you cannot do a buy down like a 3-2-1, 2-1, anything like that, do you know if there are any points associated with this?
It is have a discount point, origination fee, so 0.5 of a discount point, and that's pretty standard with all the programs that they offer.
0.5 discount points. Okay, so we got all of that done, Joel. What about the residency requirements?
Yeah, so that's still in effect. At least one of the individuals that's going to be on the loan must have been a Nevada resident for the past 6 months. Okay. So, I think everybody here has been a resident for the past 6 months. And all that they're asking for as far as proof is a driver's license or state issuer ID, or they even said on the call, we're willing to work with you on whatever document you can provide. So it seems like they're really flexible. They really want to help Nevadans get into a home. And if down payment has been the biggest hurdle to overcome, this program might be able to help you overcome that hurdle and get you into a home.
Okay, so you talked about the interest rate, and interest rate changes daily. Do you know the website that someone will go to see what the current interest rates are so they can compare?
Yeah. HomeIsPossibleNV.org. I'm actually looking at the other screen. Yeah, HomeIsPossibleNV.org. And that's where you can check the Home is Possible rates for all the other programs and so forth. But that's where they're going to be posting the rates every single day.
Okay, so is it going to be the same as the Home is Possible rates, or is it going to be a little bit lower since those are usually a little bit higher?
Today, it's actually a little bit higher.
Okay.
Yeah.
Okay, so we know where to get the rates from now. When is this actually forgiven? So how long do they have to live in that house?
Yeah, that's a good question. So it is a 3-year forgivable. So if you buy, you get the program now, and next year you want to refinance it or sell the home, the state is going to ask you to pay back the full $15,000. It is not forgivable like some of the other programs. So they are going to require full payment due back to them with the $15,000.
Okay, so we got most of the stuff covered here. Now, if someone is like coming out of another home into another one, is that allowed, or is it only for first-time home buyers?
So the way that they're doing it, they're allowing for individuals that haven't owned a primary residence in the past 3 years. So mainly for first-time home buyers, but of course, if you bought a home and you sold it 3 years ago and now you want to buy again, you're more than welcome to take advantage of the program. It's just the 3 years that they're asking for.
Okay, so just 3 years, and that's a payback. Now, we can't use this for down payment. We use this for down payment. We can't use a closing cost. Can't do any type of a buy down. But last time we discussed paying off your MI. Is it still possible to pay off your MI? In other words, have the seller pay your closing cost and MI? Is that possible?
Yeah, that's still possible as long as it comes through the seller's contribution, not from the $15,000.
Okay.
So it's still very doable. especially since they're only giving you one rate. That you're giving you, okay, so your 30-year fixed mortgage, we're going to give you the 15,000. It's going to be at this rate. You don't have an option to buy it down. So the seller gives you contributions, which can be significant. You can use those contributions to, of course, pay the closing costs. And on top of that, if there's any remaining, you can use some of that to pay off the EMI. Because this program does allow for FHA, VA, and conventional financing.
Okay. Well, you just said VA does not allow for VA, correct?
They offer for VA, FHA, VA,
Okay.
USVA.
Okay, so I'm assuming with the VA financing, what they're doing is when you bring a certain amount, your funding fee goes down. So they're pretty much depending on that, where you end up reducing your funding fee.
It could possibly reduce your funding fee, of course. So it's going to go towards the principal reduction, which brings down your loan to value. And the VA funding fee is based on your down payment. So it could potentially bring down your funding fee a little bit. So it can be structured in a couple of different ways.
Actually, I just thought about this. We can't use it for down payment for VA because there is no down payment, but you can use it for principal reduction. So someone with a VA loan,
actually, that's a really
use this as principal reduction. Go in and you buy $500,000 house is now a $485,000 house.
Yeah, so a lot of people always the VA funding fee. For those of you who haven't obtained a VA loan previously, there's a funding fee involved that's determined by the amount that you put down. And that funding fee usually gets rolled into the loan upfront. But we can use a $15,000 towards a principal reduction, which eventually reduces that funding fee. So that's a good way to put it. Yeah. A lot of different ways to structure it and get creative. And that's one of the things that we take pride in is structuring the loan. So we'll look at all the down payment assistance programs that are available. We'll put this right on top of the list and see how it is that we can get it to benefit you.
Oh, you brought up another one. Last time we discussed the possibility of stacking this with other programs. Did they discuss that today?
It's only, you cannot stack it with other programs. There are other programs available, but this is going to be a standalone product that you can only use. So if you're going to get the $15,000 for the down payment, that's all that we can obtain. That's the one program that we can use. We cannot merge it with another one.
Okay, so no other programs, including private programs.
Correct. This one just has to be solely for Home First.
So I was hoping like you could stack it with the culinary program, have the 15
get another
plus
15,
20.
get 30,000.
Okay.
But you know what? You can get 15 from the seller, and we'll make it 30. You know.
Yeah. Okay. Cool. Okay, Joel. I think we've kind of covered most of the questions that I've had today, and hopefully any questions that anyone else has. Let's go ahead and go into your closing remarks.
Yeah, no. So I would highly recommend looking into this program, especially with the way that the rates are right now. This program does have a very competitive interest rate, and like I said before, don't be qualifying yourself and getting discouraged or declining yourself from obtaining a home. I say leave it up to us as a professionals. Let us do the loan structuring for you. Let us see if this program is a great fit for you, and we can make it happen for sure.
Okay. And what we'll do is we'll put Joel's information down below if you want to contact him directly. And if you want to get on my calendar for 15 minutes, in the notes, just put in there, it's about, what's the name of the program again?
Home First.
Home First. Put Home First in the notes, and that way we'll know you want to get on, and then we'll bring Joel into the conversation and see if you can fit for this program, get those $15,000, which is better than a stick in the eye, right?
Oh man, I mean, 15,000. Who's not gonna like that, you know?
Okay, cool. Okay, well, just wrapping it up now. If you want to contact me, like I said, info is in the info tab. Call, text, email if you want to get on the calendar. That way you know you have the time blocked and you want to talk about this program or another. Calendar links down below. Go ahead and do that. And if you found this information just a little bit helpful, do me that quick favor, hit that subscribe button, thumbs up, leave a comment. That's the way the YouTube algorithm works. See you guys.